Facebook's numbers. I want to bring in market watcher Jason Rotman. Jason, Mark Zuckerberg said people are spending less time on the site, but I believe you still think the stock will go higher. Make your case, please.
Sure. This shouldn't be too difficult. Well, first of all, Stuart, Facebook is turning into a mini conglomerate a la Berkshire Hathaway because, again, as I've been saying with you for 2 years, when I called Facebook the ultimate growth stock in the 60s, I still think it's maybe not the, but one of the ultimate growth stocks because they have WhatsApp and they have Instagram. Those are the main reasons. First of all, yeah, people are spending less time, but all the earning numbers went way up, mobile advertising dollars, et cetera, et cetera. Everything was a beat. So that's really what the market has to focus on. Whether people are spending 30 minutes or 48 minutes, Facebook is making more money than they were just last quarter.
Okay. Do you own it, by the way?
No.
You don't? Why not?
I used to.
Okay. Oh. Well, you got out early then, didn't you?
You know what? I will tell you right now. I will tell you right now why not. Because my style, and this is just a personal comment, I like looking for more value, low PE ratios, higher earnings growth. Facebook's PE is kind of like Netflix and Amazon, which we'll talk about. That's not necessarily my style, but I still think it's going higher.
All right, talk to me about Amazon opening, record highs with the close yesterday. It's going to be down about $4 today. Now, it reports its earnings after the close of trading. I got to say, Jason, that the slightest disappointment could really puncture that stock. What say you?
Yeah, you know what, Stuart? I actually 100% agree with you. The one point, which wouldn't be the first time, the one point that I want to make about Amazon is this. Microsoft, obviously it's all connected, their cloud presence, their cloud market share is growing at a much, much faster pace than Amazon's. Obviously, Amazon has an extremely diversified business model. That's why Jeff is over $100 billion. But I would almost, if you wanted to come up with a creative trade, I would get long Microsoft and short Amazon for that reason alone. Okay.
I've got to ask you why the market's going to open so sharply lower this morning. We're looking at about 140, 150-point loss. What's the big deal?
Well, there's two main things, and that's a good question. Number one is just a classic general notion of the market has been overbought for so long. I mean, I'm kind of a technical chart watcher. I mean, we have been just way outside all regular, bands and standard deviations. I mean, this market's been to the moon. So it's normal to have a little pullback. And then also to be more specific, we are coming off of a Fed meeting. Even though they did not raise rates, there was a language added to the conversation that Janet Yellen added further. So there will be further rate increases, not just one or two, but further. Sounds like it's kind of going to be a gradual rate hike scenario. So I think we could see 3 or 4 hikes. Ouch. And the market didn't really love that.
All right, Jason, you used several buzzworthy expressions, but you avoided the buzzer. That's congratulations are in order.
Oh, thank you.
Jason Rotman, thanks for joining us. We appreciate being with us. Got it. Now,